We're always told that inflation is just a numbers game, right? Something for economists and their spreadsheets. But what if it's not? What if it's really about something far more human? What if it's about trust? Today, we're diving into a really powerful analysis from the Macro Butler, who argues that the real story of inflation, well, it begins right where our trust in the system ends.
Right now, if you just read the headlines, you think we can all relax, that the worst is behind us. But this analysis kicks off with a warning. This calm we're feeling, it's probably just an illusion. So let's peel back the layers of the official story and see what's actually bubbling underneath. Okay, so let's start with that official story. This is the narrative we're all hearing, the one we're supposed to believe, that the war on inflation has been fought and, basically won.
And on the surface, hey, everything looks pretty good. The latest CPI numbers came in perfectly, hitting their targets exactly as predicted. It's the kind of chart that's meant to make everyone on Wall Street breathe a sigh of relief and signal victory. And the good news doesn't stop there. When you look at core services, which is usually the most stubborn, sticky part of inflation, it's actually cooled to its lowest point in years. This is being held up as absolute proof that everything is back under control. But, and you knew there was a but coming, if you look just a little bit closer, that perfect, rosy story starts to fall apart. Beneath that calm surface, some pretty serious cracks are starting to show. Here's the catch. Today's good numbers are kinda ignoring tomorrow's reality. We've got rising energy prices, we've got fertilizer shortages, supply chains are still a mess. All these threats are just lurking under the surface, waiting to pop up and hit the official data. So, the first big crack? Housing costs. The source calls this a zombie metric, which is just perfect, isn't it? It's supposed to be dead, but it's still shambling forward at a pretty high pace, haunting everyone's budget long after it was supposed to have gone away. Okay, now this is where the story gets really interesting. On the left, you see the calm-looking core CPI. All good. But on the right, that's super core. That's the number the Fed actually watches. And guess what? It's not cooling down. Not at all. In fact, it's starting to heat back up. So here's the crucial point, the main takeaway. That brief little dip we saw in some of the numbers, yeah, that wasn't a victory lap. It was, as the source so brilliantly puts it, just a smoke break before the next leg up. The official data might be trying to tell us one thing, but the market? Well, the market is sending a totally different signal. And let's just say it's not buying the inflation is over story. Not one bit. I mean, think about it. When that supposedly good CPI news dropped, the stock market barely even moved. There was no big rally, no celebration. It was just a collective shrug. And that's because traders are looking right past today's headlines and seeing tomorrow's problems, like those rising energy costs. And if you want to see where the real money is betting, look at the bond market. The whole rate cut fantasy from the start of the year, it's over, done. Traders have gone from expecting 6 or 7 cuts down to maybe 2. That is a massive shift in thinking. So the real fear that's starting to brew on Wall Street isn't just inflation anymore. It's stagflation. That toxic mix of stagnant growth and prices that just won't come down. That's the stagflation special they're getting ready for now. So this all begs the question, what's really driving all of this? Because the numbers, they're just the symptom. The real disease, according to this analysis, is a fundamental breakdown in trust. So if the official numbers are just a bunch of noise, what's the real signal? What is actually driving prices higher and higher? The answer, my friends, isn't going to be found on any spreadsheet. See, true inflation, it isn't born from some policy decision. It really ignites when people lose trust in the system itself and when scarcity becomes a real, tangible fear. It's a problem of psychology, of human behavior, not just pure economics. You can think of trust as the anchor for the entire economy. When it holds firm, things are stable, things work. But the moment that anchor is lost, the entire system is just set adrift, getting dragged into chaos. And here's what that actually looks like in the real world. With trust, people and businesses can save and invest for the long term. But when that trust breaks, survival mode kicks in. Everyone gets obsessed with the short term, and that frantic fear is what drives prices sky high. It's behavioral chaos. So where does all this leave us? If trust is the real driver, what does the road ahead even look like? Well, it seems there are really only 2 paths forward from here. And you can forget all the wishful thinking. The future of inflation really just comes down to simple math. The path to get back to the Fed's 2% target is razor thin, but the path to even higher inflation?
Oh, that one's wide open.
To hit that magic 2% number, inflation would have to come in below 0.2% every single month from now on. Not very likely, right? The much more realistic path, with monthly numbers just slightly higher, puts us on track to end the year with inflation somewhere between 3 and 6%. A huge difference. And all of this leaves us with a final, pretty provocative thought to chew on. In a world where trust is eroding, the very assets we were all told were risk-free, like government bonds, they might just end up being the riskiest things you can possibly own. Today's entire analysis came from the brilliant work of the Macro Butler. If you want to get deeper insights on how to navigate these crazy trends, you can find him at themacrobutler.com, or you can reach out to him directly at info@themacrobutler.com.